Watchlist. As always, here's my disclaimer. Make sure you do your own research. Any information that I may talk about today on the show on Watchlist, my current watch list that I have, could be dead wrong. So make sure you do your own research. Do not take any position based on anything I'm talking about. This is specifically just something that I do for fun. Whether I take positions or not, I do not show my portfolio, but it does give you an opportunity to kind of see how I evaluate a stock. And if you look at the body of it today, you will notice that in the body there's information on two stocks. Today we're going to talk about which actually Cloud Care Inc. And we're going to talk about also Liberty Media Company, which is also where you find that Formula One that's actually growing big now. So I always don't like to waste time. I like to jump right into my show. I want to thank everybody. Don't forget to like and subscribe. So if this is your first time checking out our show, this is every Wednesday. I kind of go over a primo stock list. I talk about stocks and their positions. On Monday, the show is all about business. And on Friday, it's the slate that has to do with CFS Studios, our film division. And that show is headed up by Nathan and Josue. Where we interview different talent in the movie industry and talk about short films, long films, and there's actually feature films and documentaries. So if you never had a chance to follow our channel before, that is our makeup right now. That's what you'll find. And I hope you enjoy. Hope that you will also share this information. And don't forget, if you have a comment or question, don't hesitate to ask the question. I mean, we always say it's no dumb question, but we also know that some people do ask questions that they already know answers to. They just want to be argumentative. So if you want to be argumentative, don't ask the question. But if you do have a question you want to ask, go ahead and ask it. We definitely want to take full advantage of that. Again, welcome to the show. Today, we're going to jump right into it, and we're going to talk about Cloud Care. Now, let me give you a little information about Cloud Care. Cloud Care is actually information technologies. It is on the NASDAQ global market. It's been around for a while. It has changed names since then. But one of the things about the technologies, they bring technology solution for clients in hospitals or different type of healthcare, telehealth communities. They help increase financials and operational performance, streamline clinical workflow, and make better business and care decisions. More than 4,000 providers across the United States count on Cloud Care to help them improve patient care while reducing administrative burdens and operating costs. Services and solutions include revenue cycle management, RCM, practice management, PM, electronic health records, EHR, and business intelligence, telehealth, and patient experience management, PXM. Cloud Care is headquartered in Somerset, New Jersey. A little bit more information about Cloud Care, just in case you guys want to know. I think it's important to understand that they actually have, if you look down the body, you'll see this as well. They have three different type of stocks. They have a equity share, and then they have two preferred shares. Now, if you're not familiar today, what we're talking about on this watch list is looking at some of these preferred shares. And when you look at some of these preferred shares, you have to understand what preferred actually means. You may not be a person that actually takes any position in prefers. Prefers is not equity. Prefers is a position that you can actually take where it's debt against the company. You come prior to the equity stakeholder. So when you think about purchasing, like for me, if I'm going to buy equity of a company and I'm going to take a stake in it, I'm going to buy it in groups of 100. Secondly, I'm most likely going to take an equity stake. But if I don't take an equity stake, today I'm looking at my watch list to say whether or not do I want to add a preferred stock. Preferred stock means that I actually will get paid as debt. So they making debt payments. I don't have any equity. A lot of times preferred stocks has no voting rights. That's something you got to take in mind. So I realized that if I decide to take a position with Cloud Care, they have three different symbols underneath their company. Just so you know, they have their equity stake being CCLD. They have their preferred shares being CCLDP. And then they also have their other share, now CCLDP. So they have two preferred shares. One's the CCLDP is a little less. You have a Series B and a Series A preferred stock. One's yielding 11%. The other one's yielding 8.75%. And then they actually have their actual equity stake, which is trading right now around $3.16. So this is a stock that has been on my radar. I'm familiar with it. Prior to this stock being called CCLD, this previous stock symbol that it had before it changed, got its name changed, was actually MTBCP. That's what it was before. This stock actually, through COVID and even now, was actually trading at the $26 range. It got as high up as $30, and it's a preferred stock. So it's going to pay you a coupon payment every quarter or every 90 days. If you want to look at it that way, it pays 4 times a year, but it is debt. Buying 100 shares of this typically will cost you. Let me just see what when today's as I go through it. It traded today. It opened at $26.96. That was actually the high. The low for the day was $26.92. So 26.96, and then 26.92 was the low. It closed actually at 26.96. And since it's a preferred share, it really doesn't move a whole lot. The volume was low, 2,248. So it wasn't a lot of movement at all on this stock. It's very, very low volume stock because it's debt. You know, since I don't have any exposure at this particular point to any form of preferred shares, or I don't have any in my current portfolio, and I'm looking at medical, and you say, well, I'm looking at getting this coupon payment. Preferred stock, one of the things I need to mention if I decide to take this position is preferred stock actually has an end date. It doesn't go on for 20 and 30 years, nothing in that regards. Whenever preferred stock is issued, it has an issue date, and then it actually have a close date where they buy it from you at this price, and you receive the coupon or the interest payments on your money. So if I bought the stock today and I paid $2,696, so that's basically $2,696, and let's assume that I purchased this today, and it had a time frame as far as this preferred stock that in 2026, that on again June the 7th of 2026 is the last date. What it end up happening is that I'll get all the interest payments on the payouts, because these are not equity payments. This is actually interest payments, just to be very clear. So I'll get those payments, and then I'll get back on that date. It has an amount of money that it's going to assign to me as. So let's assume that it's $26.50. Well, all the payments that I've got in between 3-4 times a year are the payments that go towards that $26. So you're looking at my return being that, and it already pretty much tell you it's 11% annual yield if I chose to do it. One of the things about this company is that this has been something it's a medical solution. So if you decide that I'd rather have debt over equity, just so you know that if a company does have equity shares, like I said, it has 3 different classes. If the company was to wrap itself up or unwind or close, let's say they filed bankruptcy or they were to close up shop, the first rights will be on the MTBCP and the CCLDP. That's the same stock. I just want you to know that. Even though that they actually have CCLDP, they still pay. That stock is also known as MTBCP. So if you're looking it up and you check on, any type of Charles Schwab, any E-Trade, if you're looking at Robinhood, you're going to see it as MTBCP, and you'll also see it as CCLDP. So I just want you to know that. It also has a B to it as well. So, and that's because that was the previous one before Care Cloud Inc. actually took over the name. I mean, when you go look them up and you do any research on it, you actually see that that's what have taken place, and that's the reason for that. It's out, like I said, it's out of Sumner, New Jersey. If you do not have an exposure, the other one I'm looking at is very interesting because this stock's a little bit more. This stock itself it has some little bit more information, but here it is, Liberty Media Company. Now, you guys may not be familiar with that, but this company, they call it Liberty Media Company, but in actual spec, it's actually a holding company. It engages operations. It does have media and communication and entertainment business, but it operates through the following segment. It also holds like Sirius XM Holdings, Formula One. So if you wanted to have, I don't have any racing stock at all, but if I wanted to be exposed to it, this stock holds Sirius XM. It actually has Formula One. XM Holding segments refers to a complementary audio entertainment business. As you know, Sirius and then Pandora as well, that holds it. It also deals with music, sports, entertainment, comedy, talk, news, traffic, weather, channels, and information services. Pandora provides music, comedy, and those things alike. Formula One segment focuses on the global motorsport business that holds exclusive commercial rights. This is what makes them, and also to respect to the World Championship annually, and then the motor racing basis competition. This company was founded back on March 28th of 1991 and is headquartered in Englewood, California. Now, I think the interesting thing about this company is that because they have the exclusive commercial rights for this, so that means that they deal with the Sirius commercial rights, they deal with all Formula One commercial rights. Um, th- Another thing is that this company here also owns the Atlanta Braves. So if you wanted to actually have two things, exposure to owning it, having a stake in, and this is the equity share. So this is like having a stake in. It actually trading right. It closed at $65.61. In the last 365 days, it's got as low as $48.31. So you have this here. It is telebroadcasting stations. It broadcasts consumer discretionary. That's the category it falls into. The stock symbol is FWONA. And it's very interesting because I'm looking at my current portfolio and I'm saying to myself, it is a little bit more expensive for me to buy 100 shares. I will be, it would literally cost me if I'm buying 100 shares today. I'm looking at spending well over $65 for this stock, $65.61 to be able to carry this in my portfolio. This again, now the question that some people may ask me in this position, does this stock pay a dividend? Does it pay a dividend? Well, I will tell you that at this time, it is considered. It's not a young company. It's an older company. Return of equity is 2.5%. You have the high for this stock. Most people tell you is right around $80 to around 90. I mean, the low forecast, $58. High forecast, right there around the highest I anticipate going is 90. I kind of discounted down to 74. So that gives you about a $10. It gives me about a $10 swing in this stock. Again, do your own research. Just don't take my word for it because you got to be able to do your discount. I mean, for me, I always do the discount stating that I don't like the greater food theory. That means that I anticipate somebody coming in and paying more than in stock for me. I'm actually evaluating the company on what it was and being exposed to the fact that they do own the Atlanta Braves. They do have exclusive rights to Formula One racing. And as you know, Formula One racing has moved into the U.S. So it's now I believe, if I'm not mistaken, it has one in Vegas, one in Miami, and I think it's three races this year overall that will be here and in the United States. So take that in consideration itself. When you take that position, you say, okay, do I want to be exposed? Now, underneath my current watch list, I still have the same watch list I had before. I wanted to talk about these two stocks today. I put more information into the body so you can actually read about it. That way, you can see just how I evaluated the companies. What do they do? How's the benefit of it? At this particular time, I have to ask myself this question: do I want to pay $26, or currently does my current watch list? So sometimes when I'm looking at my watch list and I'm building a watch list, I'm asking this question: have the stocks I currently picked? Now, there were some stocks that I had picked, and I started this back in February. Now it's June. From February always to June, all the way to June, there were stocks that I picked, and two of them panned out. The rest of them kind of moved sideways, which is expected. We're in a bear market, and in my opinion, again, others will tell you differently, but we're in a bear market. Well, nobody will really argue that we're in a bear market right now, but most of all, they'll tell you whether or not we're in a recession. That'll be a debate. In my opinion, which is mine, subjective, doesn't include anybody else. In my debate, you know, if you want to own, if you want to have a stake in some of the revenue sources that come from the Atlanta Braves, if you want to have a stake in Formula One racing commercial rights, then I would tell you that Liberty Media Company, you want to do your research on it, see if it fits into your overall portfolio. And if you don't know how to build one, talk to a professional. If that's something that you've never done before, because I always suggest this is education and also informational, but it's not for you because I do this personally for myself. I don't represent anyone else in this regards. Whatever I pick, if the stock capitulates, that's on me. And you got to be able to understand that if you're going to be a retail trader, if you're going to be an institutional trader, most of the things you have to take responsibility for any choices that you make and do your own research, come up to your own discount, what you think is the best price to enter and exit. But out of the two stocks, at this particular point, I'm gonna do a little bit more research on it. I wanted to share it with you guys. Didn't want to have a long conversation today, only because I think it's on the Wednesday we look at the stock list. I still have my current stock list. I'm looking at these two stocks. Both of them are a little bit above what my current stock list is. When you think about, I don't see if I did or didn't take the position with DraftKings. I don't see me. There wasn't enough profit in the DraftKings to be able to just take that profit and roll it into. Yes, I could do it into cloud carrier, yes, but as far as the standpoint of Liberty Media Company, that's $6,000, dollars, $6,559, if I'm not mistaken. I'll verify that real quick because I just mentioned what it was, the overall price, as which is $6,561. I'm sorry, $6,561, and that's important as well. Do I really want to tie up that kind of money? Now, if I want a piece of the Atlanta Braves revenue, and I want to have Formula One exclusive rights and some Sirius money, some Pandora money, and I am a Sirius subscriber, so when in my car it's a year, so I have that for a year. Every year you got to renew that. So I'm currently have that service. When the time to renew, I'm going to pay it again. So should I have that exposure since I'm already paying for that service? Should I take that and be able to get money from Formula One exclusive rights? Now that America is getting more Formula One racing, we normally get the NASCAR. There's no mentioning that Liberty Media Corporation is dealing with NASCAR exclusive advertisement rights at all, but I know they do have the exclusive rights for Formula One. So with that being said, I'm going to place these on my watch list that I'm going to set aside. So I normally, like I said, I try to, hold anywhere between 3 to 4 stocks average in my personal portfolio. But in the position of having these stocks, I do want to do a little bit more research on them than I've done. I took some time to do some research, but I've been really looking at them and saying, I haven't made that. Right now, my decision is I'm going to add them to my watch list. I will add these 2 stocks. One, I have right now I have no stocks that I actually take that are preferred, which means they're debt payments. They're not equity. Most of the stocks that I hold in my portfolio are equity stake. I don't have any debt related. And there's a time that, I suggest that I would take debt, and that's when I can't find anything else. And it's better than a bond rate. I mean, there's no bond paying 7 to 8% right now. You'll get 5, maybe 6, but you're not getting no 8.5 to 11% on no bond. And for me, that's one of the things that I would look at. Bonds pay coupon payments as well. Some pay semi-annually, some do pay quarterly. But if I'm looking at getting a premium, I'm going to be putting money versus doing treasury bonds, then, CCLDO may make sense for me. So that's something to think about. I have to think about for myself and see if that's the best thing that I choose to do. And if it is, then so be it. So be it. I think it's important to make these decisions and strengthen my portfolio. Integrate, not diversify. Integrate, not diversify. That's always my philosophy. And from there, the choice would be cool. So I want to thank everybody. Don't forget to like and subscribe. Also, in the body, I'll tell you there's 2 companies. If you are living in Iowa or Omaha and you're looking, especially if you watch the show for financial purposes and you watch the Monday for business and then you watch today the watch list and then you watch the slate on Fridays, and you're saying, hey, I would love to get training in singing, I'll definitely tell you to check out In the Body. I put down there, I highly suggest that one of the people who support our channel is Vertical Connection, VCI. I definitely tell you that there are numbers there if you're looking to get any type of vocal or anything when it comes to cow-calf operations. Also, when it comes to building decks, doing any type of second edition, I'll definitely tell you to call CLI, or also known as Customized Living, and their numbers in the body. These are 2 companies that support our channel and have supported our channel and have been great partner with us. And we just, thank them for their support, and we continue to support their business as well. So if you haven't took the opportunity to watch some of our other videos, I definitely tell you go ahead and take advantage of that as well. Check out the watch list starting in February, see what we removed, see what I added, and I'll see you next Wednesday.